Hi guys and welcome to the trading show. This week we are gonna talk about
markets, metals take a break. Our portfolio, mini S&P flies. Tip of the week, bias on feeder cattle. And the weekly rollover.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Well, this week we can see positive performances for all financial sectors, except for bond sector. As you can see, there are very few red numbers. In more detail, we can see contained increases for the American stock indices. The European one are doing better. Furthermore, we can see how the volatility, for example, on the mini S&P is continuously decreasing, but it is still high when compared to the long-term one. Certainly noteworthy is the metal sector, which was coming from a strong bullish week and which took a break. In this chart we can see the silver future, on which there has been a violent decline with a subsequent pullback. And the same type of behavior is also found on gold future. We will see during the next week if metals will resume the bullish trend or return towards average values. Volatility is certainly rising, and this is due to the width of the daily ranges. The same goes for silver, obviously. The mid sector also rises, soft commodities too, and also cereals that had shown a weakness in the previous weeks. Basically, they are still in bearish trend, even if you can notice attempts to reverse the trend. With negative returns, on the other hand, we see the bond sector. In particular, we see the treasury bond drop significantly, as much as the treasury note and the bond future. Talking about implied volatility, there is not much new to report. We are almost in contango, as you can see from the SPX volatility indexes. The VIX 1 year has finally returned to a higher level than the other indices, and this is the typical volatility term structure during bull markets. However, due to the uncertainty of the US elections, a large gap persists between short and long-term volatility. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions. Okay, so let's start from a system by Andrea Unger, written using the template provided in our training courses. This system works on the mini S&P using mean reverting techniques. It is quite easy to guess that from the chart, and it uses Andrea Unger's patterns to filter the trades with the highest probability of success. Recently, this system made 3 consecutive profitable trades, and the last one just in the current week. To improve system performance, we added a filter on data 2 based on the VIX index in order to inhibit system activity, which is suspended when the VIX index shows values that are excessively high compared to its average. The reason behind this is that in these situations, when there is a panic in the markets, the mean reverting behavior of the mini S&P is not so reliable, so it is better to stop trading activity. Let's take a look at the metrics of the trading system, and we can see a good profitability even during 2020, despite being a really difficult year for the stock market, and the same is also true for 2018, during which the market experienced 2 important drawdowns. Let's change the underline and move on to the bond future. I'm showing you a system that dates back to 2012, born for the forex market, but which surprisingly gives good results also in this underline. It is a volatility breakout trading system which therefore works in the favor of trend with market orders. As you can see from the chart, during the current week he made 2 profitable trades, and also during the current year the performances are quite good. Its equity line is not the most regular, you can see a couple of drawdowns, but in the last period it is showing fairly regular returns. I want to show you now a system that works on volatility using the VXX-ATN, which is included in the Cracking Volatility training program. This system was written in 2016, and in this chart you can see it on a 15-minute time frame in a fairly aggressive version. Using instead a longer time frame, such as for example 60-minute time frame, is able to return a smoother equity line. Anyway, let's take a look at the results. This is the equity line from the end of 2019 until today. This represents the March drawdown. The system is short volatility, and during that time there was a violent rise in volatility. But after that the system was able to recover losses and reach new peaks. In the current phase it is in a positive trend. I want to leave you with a suggestion. My advice is to try to develop systems on this underline which shows a very marked bearish trend that is not difficult to exploit with trading systems. The main focus must be on risk management, and therefore a good system must be able to stop trading activity when a strong explosion of volatility occurs. We know that they can be in the order of 1 or 200% in a few days, and for this reason the position size is also extremely important.
Hi everyone, and welcome from Andrea Unger. And here we can see I have plotted the average movement into the trading month of the feeder cattle future that is listed on the CME exchange of Chicago. So here is it has been represented the average movement of this underlying into the trading month. So on the x-axis here you can see I have the number of trading days of the month, and then the number of the trading days of the month goes from 1 to 23 in this case, because here we are not considering the holidays and the weekends where the market is closed. So in this case only the working and the trading days are considered. And what I want to show you here is that it seems that feeder cattle has a particular behavior into the trading month. And in fact it seems that during the trading month, in the first part of it, there is a downtrend movement on average that lasts about 14 trading days, and then rising movement, so a long bullish movement starts. But in this case, for the long side, you have to take care of when it is profitable or not, and in fact here we can see that on the red line that represents the last trading period analyzed here, the long movement lasts only a very few days on average, while in a previous period that is represented by the blue line, it seems that the average movement was more consistent, and its length was higher, so the length of the movement was more significant in the past. I would suggest you not to trade, of course, as it is this kind of bias or behavior, but I would strongly suggest you to try to use it as a filter for your multi-day trading strategy.
Okay guys, so rollover calendar, on 19th August there is the settlement date for the VIX future, and immediately after that there is the rollover of crude oil future. After a few days we have to roll the natural gas future too. On 27th of August there is the settlement date for feeder cattle, but we are already active on September expiration. And finally, at the end of the month, there will be the rollover of the Bitcoin future. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.